So in this slide, I'll be discussing about the application of Wakalah concept in the Islamic insurance system. So first of all, the recent presence of several Islamic financial system operators has brought a fresh hope to everyone, in particular the Muslim society, of enjoying a system founded on divine revelation. Compliance with Sharia criteria is required for the legitimate and integrity of Islamic financial goods and services. This expectation must be made by the Islamic financial institution, which is IFI. Apart from the Sharia, compliant Islamic financial transactions are done to ensure that the necessary operation, framework and infrastructure in place. The Sharia contract-based regulation policy attempts to ensure that Sharia contracts in Islamic financial products and services are implemented consistently. The main goal of this policy document is to improve the legal certainty. One of the biggest financial Islamic is takaful, which is included in the terms of Wakalah. So there's many countries that have applied and are using this type of Islamic bank, including BNM, which is Bank Negara Malaysia. In fact, the growth of Islamic banking and takaful by a number of financial institutions should be applauded because it allows the society to choose a fair, transparent and efficient financial service. Takaful is a fast-growing and changing industry. The creation and growth of takaful is primarily motivated by the desire to provide an Islamic and Sharia compliant alternative to traditional insurance. Therefore, takaful is like a traditional insurance is intended to safeguard and indemnity both people and corporate organizations against the loss of risk to their self or possession. Do you guys know what is Wakalah? Wakalah is the Arabic word from protection and remedy on behalf of the others. The term of Wakalah is defined by the Bajat al-Ahkam al-Sultaniyah here based on Hanafi school. Wakalah is a legal term and refers to a contract in which one person authorizes another to act on his behalf in performing a specific legal activity. It is actually an agency contract, which means you are working or providing service on someone else's behalf. Besides that, a person who builds contractual and economy agreements between a principal and a third party for a fee is known as an agent. An agent's action on behalf of the principal is treated as if it were taken by the principal. Agency is necessary because an agent is required to perform a certain task for which the principal lacks at the time, skills or capacity. Aside from that, Wakalah is actually a non-binding agreement that can be terminated at any time, either by agent or the principal, as long as both parties agree. In other words, Wakalah is a contract in which a person acts as principal and authorizes another party to act as his agent to do a certain duty on a subject that may or may not be assigned for a fee. So the concept of Wakalah's contract is for the provision of service, including sales and purchase, leasing and hiring, borrowings, loan assignment, guarantees, pledge, gift, leasing and many more. Besides that, Wakalah is also used by Islamic banks in a variety of Islamic products such as Mudarabah, where a legal contract on a fiduciary relationship between a provider of capital and entrepreneur. So any profit made by the capital is distributed in a Mudarabah, while the Rabul Mal bears the financial loss. Next is Musyarakah, where a type of partnership formed for the purpose of running a business in which all participants share the profit according to the predetermined ratio and losses according to the contribution ratio. It's actually a great alternative to interest-based lending, and it has a lot of ramifications for production and distribution. So the third one is Murabaha, a cost-plus finance in Islamic financial approach which the seller and buyer agreed on an asset cost and markup. So the use of interest as a markup is banned by Islamic law. Muharabaha is not actually interest bearing debt, but it is Islamically permitted sort of a credit sale. Apart from the example given, there are actually a few other wakalah concepts such as salam, istina'ah, and ijara. It is also used for payment and collection of trade of bills, fund management, and securitization. And for agency services, they offer on behalf of their customer. So to avoid any disagreements, the nature of the job to be done should be clearly specified. A specialized or general agency contract can be both commutative and non-commutative. If wakalah is used to sell or buy things, the commodities kind, quality, and other essential attributes should be explicitly mentioned.
Assalamualaikum. My name is Muhammad Kadir Azri. Today I would like to present about the conditions of wakalah. Conditions related to contracting parties. The first one, the agent must be a person who is able to take responsibility and meet the minimum requirements, clear-minded, mature, and intelligent. Second, if the agent can also cancel the contract, the person is free to terminate the contract or service. Third, unless the agent's liability to the party has not yet been fulfilled. Fourth, the principle is that you need to know the agent, either by name or physical appearance or vice versa. It is legal to outsource certain commerce to an agent, even if you can do the same business yourself. Last one, the wakalah contract ends with the entrusted mission or the performance of the mission. Conditions related to the object of agency contract. Firstly, the authorized person must clearly specify the business object or transaction in the contract. Second, the subject matter of the agency contract must be able to profit from legal authorization. Wakalah for physical prayers is not allowed, as the purpose behind this prayers is to test and act as test for believers, except for some prayers like pilgrimage, hajj, slaughter of animals for sacrifice, kurban, distribution of zakat, and fasting of kafarah on behalf of the dead. Fourth, the appointed agent shall not be liable for any damage or interruption of business dealings, except in cases of proven negligence or ignorance on the part of the agent. Lastly, agents are not allowed to act beyond what was authorized for him in the first place, unless it is an unrestricted agent, wakalah mutlaqah. Definition: takaful insurance. Takaful is a type of Islamic insurance in which members deposit money in the pool system to guarantee each other from loss or damage. Takaful branded insurance is based on Sharia or Islamic religious law, which explains how individuals are responsible for cooperation and mutual protection. Takaful's policy covers health, life, and non-life insurance needs. Takaful insurance companies have been introduced to replace commercial insurance companies that are believed to violate the Islamic regulations of riba, interest, al-maisir, gambling, and al-gharar, uncertainty, which are prohibited by Sharia law. All parties or policyholders of the Takaful agreement agree to guarantee each other and donate to a pool or investment trust rather than paying premiums. The pool of donations collected will form the Takaful fund. The contribution of each participant depends on the type of coverage desired and their personal circumstances.
Type of wakalah. There are 4 types of wakalah. Okay, the first one is specific agency. Okay, specific agency is made an agreement for a particular known as transaction. For example, an agent needs to sell or buy a particular home or car. Okay, the second one is general agency. It is general delegations. Okay, for example, a client asks an agent to buy a 4-bedroom home. Agency. Restricted agency when an agent behave under certain conditions. For example, buy a home at a specific time and at the specific price. Okay, the last one is absolute agency. Absolute agency happen if no condition is set for absolute agency transactions. For example, agents are not given a specific price or time. The basic principle of takaful can be summarized as contracting parties cooperate with each other for their mutual benefits. It's also each insured person make a contribution in the form of a donation to help those in need. In theory, takaful is seen as cooperative insurance where members contribute a certain amount to a common fund. The purpose of this system is not to make a profit, but to maintain the principle of burden each other.
The element of Wakalah. For the element of Wakalah, the Hanafi schools assume the same approach as in other contracts, whereby it's constant of offer and acceptance only. On the other hand, other scholars including the Shafi'i, the Maliki and the Hanbali are of the opinion that is complex four elements, that is, offer and acceptance, the principle, the agent, and the object. Element of Wakalah, that is the principle. There is muwakil. The principal is the contractual party in the agency relationship for whom someone else is asked to act as his representative. The principal should possess legal capacity to enter into a contract. In other words, he must be able to perform the act which is the subject matter of the contract. The second is the agent, that is wakil. An agent is a person who has power to affect the legal position of another person. Thus, the agent should possess the capacity of executing and understand the nature of the transaction that his conduct on behalf of the principal. Moreover, the majorly required an agent to have reason and understanding as a condition for appointment of an agent. Number 3, that is the offer, that is ijab, and acceptance, kabul. The offer and acceptance must be clear for the contract, because the contract must to make the contract to be valid, the offer and acceptance must be clear. An offer and acceptance are the essential element of making a contract. That's why that is more so important. The last, the subject matter, that is muwakil bihi. The subject matter should be known to the agent to the extent that its performance is possible for him. We need to make the performance for someone is possible. If the contract of the agency is for the purchase of things, they need to make sure the quality commodity to be bought should be identified. Models of takaful. There are variation models of takaful according to the nature of the relationship between the company and the participants. There are wakalah, mudarabah, a combination of the two. In the Sudan state takaful model, every policyholder is a shareholder in it. An operator runs the business on behalf of the participants and no separate entity manager of the company. Of the business. Sharia experts consider this preferable. In other Islamic countries, the legal framework does not allow this arrangement, and takaful company work as separate entities on the basis of mudarabah in Malaysia and wakalah in the Middle East. Difference between takaful and conventional insurance. First and foremost, Islamic insurance is a type of social solidarity takaful based on the principle of responsibility to protect and cooperation in line with Islamic Sharia. First, the policyholder in conventional insurance replaces uncertainty to certainty. He distributed the potential economic loss from the recommended risk to the insurance company in exchange for a predetermined payment premium. In Islamic insurance, the people who share all process tax because there is no commercial transaction. Number two example. Conventional insurance companies are income, so although Islamic insurance providers are not, shareholders of Islamic insurance providers are really not entitled to share of the company profits, but they are entitled to claim for their offering and a share of the dividend income of money managing by them. In a conventional insurance business, policyholders do not have the opportunity to vote in the company shareholders or read the firm's annual report. However, in Islamic companies, they do. All individuals who pay a specific visit fee get access to these amenities contribution.